It's midweek. Welcome to Business Incorporated live from Lagos, Nigeria. Thank you for joining us. I'm Chimeze Obi Iwago. On the program today, World Economic Forum on Africa begins in Durban, South Africa. EY Africa releases its 2016 Africa Attractiveness Report and paints mixed foreign direct investment picture. Plus, 12 parties, including local and foreign banks, express interest in taking a stake in Kenya's Chase Bank. Let's get started, and we'll begin with the markets. And in Africa, only the South African market was looking down at intraday after the South Africa's central bank, in a report, says it is concerned about further downgrades of local currency debt and the impact on the stability of the domestic financial system. The JSE index was down 0.24%. Nigeria's all-share index is still looking green, trading higher by 0.16% at midday. The Egyptian market was also up 0.45%, while the Nairobi Stock Exchange closed up 0.54% on Tuesday. In the Middle East, Saudi Arabia's stock market fell after oil prices slipped, while a televised interview by the top economic policy official, Deputy Crown Prince Mohammed bin Salman, did little to boost market sentiment. The prince said the government will focus on investing in the mining sector, developing the weapons industry, supporting an auto industry, and improving the kingdom's logistics, both sea and air. He also says authorities would announce a program to address the kingdom's shortage of private housing in the third quarter of this year. Saudi index fell 0.34% at intraday. Elsewhere, Dubai's index edged down 0.51% as 20 shares declined and only 9 rose. Union Properties fell 1.0%. In Abu Dhabi, the index rose 0.62%, with the largest listed lender, First Abu Dhabi Bank, up 1.4%. Qatar's index was down 0.37% at intraday, near a 20-week low. Telecommunications operator Ooredoo was the worst performer, down 1.9%. The company's Omani unit, Noras, looks set to face fresh competition after 3 other major Gulf telecommunications operators said they were bidding for a license in Oman. And investors in Europe have continued to digest the latest in Brexit negotiations and corporate earnings. The European Commission also published its spring forecast for gross domestic products today. Now let's get a sense of how the market is trading today. I'm being joined by DWTV Channels TV financial correspondent at the Frankfurt Stock Exchange, Janelle Dumoulin. Good afternoon, Janelle. Thank you very much for joining us. Now, the euro stays in positive region today, but regional stocks were in red, despite the positive Eurozone GDP numbers coming up 5%, meeting forecasts. What's upsetting investors and the markets?
You're definitely right about that. It is not at all the best day for European trading ever. So Euro stocks down, DAX down, CAC down, IBEX down. And there are various reasons for that, starting with a slide in metal prices, dragging down the stocks of mining companies like Centamin and Fresnillo, and dragging down European stocks with them. Now, you're asking why investors are upset, but that might not exactly be the wording that I would use. I would say they're more hesitant than anything else. So obviously the big market event, the big market news event of this week was the release of Apple's earnings, and that could have been the thing that would have pushed indices higher. That was the anticipation here actually at the Frankfurt Stock Exchange. But now that Apple has come out with mixed results, for example, you have lower iPhone sales but higher profits, though that big push upwards did not happen for the indices. Now, and it's also because investors are adopting a wait-and-see approach ahead of the release of news out of the Federal Reserve that's happening after the European market its close today. Now, the Fed is widely anticipated to keep the interest rate steady for now, but investors will be scanning the minutes for clues as to a possible rate hike in June. And of course, we also have jobs data and wage growth data coming out of the U.S. at the end of the week. So with all of that, you have a lot of reasons for investors to stay their hand for now.
Right, talking about earnings, there are quite a number of them that came out today. Aside from Apple, of course, we have BNP Paribas and food retailer Sainsbury's. Talk us through these earnings.
Yes, we touched on the miners somewhat. They're still suffering from the slide in metal prices. So let's go straight to Sainsbury's. We're seeing a drop in stock of almost 5% after they reported a pre-tax profit fall of 8.2%. And analysts are actually expecting that those falls will continue for the rest of the year, and that would mark the third straight year in profit declines for the food retailer. As for BNP Paribas, that is looking slightly better. It's seen a jump in its revenues in its equity and fixed income trading business, and that helped it beat analyst estimates in terms of its first quarter earnings. So overall, net income was up 4.4% to 1.89 billion in the first 3 months of the year.
Now, Brexit seemed to have taken another twist. France and Germany are seen drawing blood from the UK over Brexit, expecting an upfront divorce gross payment of up to 100 billion euros. What's this money needed for, and why an upfront payment?
Well, let's not forget that once Britain leaves the European Union, the EU will also lose a major financial backer, because as it happens, all the EU member states pay into a communal budget. And that communal budget is used to finance things like subsidies, like pensions for EU bureaucrats, like infrastructure or research. And now the budget for this period is expected to cover the time until 2020. And let's not forget that Britain actually plans to leave the EU in 2 years, so that means it would have some financial commitments outstanding. So basically, that's what these negotiations are all about. It's about the EU making sure that it's not left in the financial lurch after it loses a member.
Right, thank you very much for your time, Janelle. Of course, the markets will also be expecting the Fed's interest rate decisions coming out later today. Thank you for your time, Janelle.